All right, Luke. So it seems like the TSXV is at the top of the list for a change, and it's mostly Canadian exchanges actually in the top of in the top winners this week. And it's specifically starting with a company that I've been following for about 2 years now. And you've been following it for longer than I have. Well, we followed it through quite a lot of volatility actually, and that would be Storm Exploration, was previously called Lithoquest. Lithoquest. It was called Lithoquest Diamonds, and then something else. It's a teeny tiny $2 million market cap junior that went up 130% this week, now to a market cap of almost 5 million Canadian dollars. That is, and this is simply on the news of getting a new project. Well, technically, it's getting the option to earn into a new project. It's not like they bought a new project or anything like that. And they're also doing it with another company, by the way, that we've discussed called Prospect Metals. Yeah, but so I don't think I want to go too deep on the news here specifically. I think I mostly understand what's happening. I just want to know how you look at those deals where a new project gets acquired or something happens of this size, and then the stock, goes up a lot, like it doubles or more than doubles in a week. Do you then feel like it's time to get busy, or is it like a missed opportunity already after a company acquired a project and you think, oh, no, this is too late? How do you look at it?
Yeah, thanks, Antonio. This is a typical example of a Canadian junior from many perspectives. They have started as a diamond company with a very promising project and a lot of big names involved. Went from a shell valuation to a 84-cent share price in 2018. Then didn't directly find diamonds, and the stock collapsed from 84 cents initially to 10 cents, but ultimately there was not really a lot of interest anymore to fund it in a bad market, especially for diamonds. So most shareholders sold, and the stock sort of landed in at 3 cents in 2019, maybe 20, I think. And at that point, I didn't really pay attention at 3 cents yet, but at 3 cents they did a financing with some I think new people looking for new projects. So they sort of positioned some people. Some existing shareholders lowered their average by getting in at the 3 cents level. It was a small placement, and I noticed the company and started talking to them a little bit, and they confirmed that they were looking for something new outside of the diamond space. And I thought, well, good shareholders, they have invested at considerable amounts of money at much higher levels. I calculated it should have been around 20 cents or something, and thought, well, at 3 or 4 or 5 cents, it could be a good bet with a good share structure of 55 million shares. And initially, that was a good idea because the stock started going from 5 cents to 6, 7, 8 cents. They announced the acquisition of a gold project in Ontario, and that's when things quickly became difficult because promising project, pretty expensive deal with a London-listed company with option payments, pretty high option payments. So it was obvious they were going to finance a couple of times. They did. And the stock slowly moved to 12 to 15 cent financing. Crescat got involved. We recently discussed everybody started believing in, hey, this could be interesting, and the story was building, and they came out with some early news, and then they were drilling, and they were trading at 16 cents, and they announced that they had to suspend drilling. It was not very obvious in the news release because it was a long news release about all kinds of exploration results, but they also mentioned we suspend drilling because we have a bit of an issue with the First Nations. This happened in April, I think, but we will be drilling again in the summer of 2022. They luckily said, because we just had the summer of 2023 and they're still not drilling. I sold a little bit at 16 cents just for clarifying, but not much. So I still own quite a lot of stock. And this chart I prepared is a chart without rollback because the stock started going down a month or two later. Option payments were coming. I believe Landor may have sold some stock, their optionee on the gold project. Then, there was a lot of selling, not a lot of buying at that moment anymore. More option payments were coming, more dilution. So they did another financing, and things were getting worse. And you can imagine as a junior, you're getting into a very difficult spot when you need to finance, stock price is going down, option payments are coming. and that's when they were in a difficult spot and changed the name to Storm, and also did a rollback. So I'm not at the end of the chart yet, but that was the sort of intro to Storm, how I got involved with it, and I think you know them as well, right?
I know their colorful past, which they unfortunately had, because I also know the management, and the CEO is I don't want to say too good of words, but I like him as a person. I haven't seen much happen with this company so far, as you explained, but I really like Bruce, and I've interviewed him a couple of times. He had so the first drop in the share price, to clarify, was also, well, I don't want to call it a scam, but they went through a tough time because of another company with their diamond project and everything that happened around them. So they were, it's something that it's almost like a legal, well, I don't want to say too much. I really don't want to say too much, but there's something that happens, especially in the Vancouver resource scene, where companies could get forced out of projects, and their share prices get attacked, and so on and so forth. And so they became the victim of that. That was the main thing that knocked them down, not out, but down. And so that's one thing that I do know. Also, another thing is that Eric Sprott is, I believe, still in there. It's not the end all be all, of course, but he went in there at higher prices, I believe. And yeah, I also saw their rollback. I'm not a fan of rollbacks, and most of the times they are more of a reason for people to short the stock, unless they're done for a reason, because a new project or the restructuring or something. This was not necessarily that. So the rollback also didn't necessarily play out necessarily well. But so how do you deal with something like, I mean, it's a company that you've watched for a while. You see them acquiring a new project, but the stock has already gone up. Do you then go to to analyze the new project and see if there's value, or do you just think like, okay, no, it's too late?
Well, I do, and in this case, they buy a project from Prospector. Since I follow Prospector, I know the project. It's an interesting one, especially when Newfoundland became very popular and they had some high grade on surface, and it became a promising project. They started drilling it, but I think for Prospector, it was not their flagship anymore. It was not the highest ranking project anymore, but it has some promise, and to it's not always the number one project that will become the big one. I mean, a lot of companies think their number one and number two projects are the main ones, but then ultimately the number three is what becomes a discovery. So it's not to say that if Prospector is not ranking at this as number one anymore, that it could not be a number one type project. I think that Storm needed some new projects next to what they are doing in Ontario, because they are very depending on First Nation right now, and they are expecting to be drilling last year in 2022, and they're still not drilling because they are negotiating with the First Nations an exploration agreement that allows them to go back to Miminisca to drill for the gold over there. Yeah, you're right. I think what you just said about that issue during the diamond days, people who are interested, I think you can still find some information on CEO.ca, chatter between people about what happened. And another reason why the stock came down, it was not the only reason, but there was some reason the stock came down in 2018, I think, when the company was popular and people were staking ground around them, and there were things happening around and in where they were drilling or where they were looking for diamonds. But to the current day, yes, I think it's a good thing for them to buy a new project or to option a new project, because there's a lot of uncertainty, in my opinion, around Miminisca. When can they drill it? They have two other projects in that same region. One of them, I think, is close to having all the permits. The other two are not there yet. And will it come? It might. Will the option payments come? Yes, they still have option payments to make. So I even thought about maybe just drop the project in Ontario, because it could also be a liability. But I think it's a good sign that they are, well, a good sign. I think it's a good thing that they buy a new project in a different area, which has promise, which you can also promote, frankly, and hopefully do some real work and try to, make a new discovery over there as well. What I always keep in mind is it is obvious that they do this also for the reason of, keeping the market busy with something else and not just waiting for Miminisca, which of course keeps me a little bit reserved. and they have the finance, which is also a reason that the stock may stay at 10 cents or around 10 cents, because that seems to be a logical financing level after trading at 5 cents for a while. And this is 5 cents after the rollback. The chart that I made is I took the rollback out, and they would have been trading at 1 or 1.5 cents, I think, at this point, without rolling it back.
Yeah, and the move comes, I believe, naturally because they need money to keep existing. I think the CEO stopped taking a paycheck when they needed money and stuff like that. So they are gonna need to finance, and this is a good move right before the financing because it gives new hope, to quote Star Wars. And it's I mean, it gives them a better level to finance at the very least, whatever the project might be. It gives them a better place to finance at. So to existing shareholders, this is, I suppose, this is welcome.
And just one more thing, I think this is a crucial moment, because I think at this point they have a very good they have a good share structure with 42 million shares out. The stock is, I mean, the company is cheap. So for new people coming in, you're looking at a cheap. What is cheap? I mean, the market cap was below $2 million. Or around $2 million. So you can say it's a cheap company with still a lot of big shareholders, not only Eric Sprott, but also others. That was the main reason for me to get in 2019 or 20. So that situation presented itself again. I didn't buy more because I still own stock from that time. And I feel like, let me just wait and see what's going to happen. With 40 million shares out right now after the rollback, you can make, I think the next couple of decisions are going to be very important to Storm. If they do a good financing with, at least 1 or 2 people backing it, and not just getting 40 different people in with a full warrant without real support, I think you could also, already make your first step into the next rollback, because you need 1 or 2 stable parties backing such a financing. They don't have to be headline figures like Eric Sprott invests $2 million, but I think behind the scenes, I think you can always ask the company, like, hey, is this a financing with just 5 people, 10 people? Is there some backing behind it? I think that's crucial, because if you just do it with 60 retail people who have no real long-term plans with the company, then you could make your first wrong step and you could end up doing another rollback down the road. But if you do a new project with a good financing backing it, then it could be the start of something good. So I think Storm, I'm not going to say it's anything bad or good about it. This is just the past. And I think the next steps are going to be important for the company's future, or crucial, I think, not to get into the same situation again to roll back, because the stock is another 50% down.
Do you think you can, this is another Luke special in my opinion, like lastly, do you think you can even maybe like bottle that strategy? Like I know you follow these things like companies like that, and you're often early to them, or you've been following them for a while. Like you normally notice something in a stock happening in the volume, in the level 2 data, and so on and so forth. You would look at the share structure, you would like it, I don't know, you would call the company that makes the roads, in this case Newfoundland, or something out of the ordinary like that. It's research, it's desktop research, but in depth. And I know you somehow sniff out that a potential new project is coming, or something else is happening that's going to change in the company. Like you sniff the probability for it happening in upfront without getting inside information, but just exploiting what is available to everybody on the internet, phone numbers, connections, opinions, and so on and so forth. Is there like a checklist or something that I could just program into my brain, like an unlimited money hack?
I think the theory behind what I do is pretty simple. I mean, you could do it as simple as filter down to companies without warrants or not many warrants that are trading around $3 million, that have a good management team. That's a bit of manual work, of course, to select good management teams, and find out why they are trading at $3 million. Sometimes for good reasons, sometimes for reasons that you think, this may just be a temporary thing. In Storm's case, or Lithoquest, they came down because of the diamonds, and it was not in public domain that they were looking for new projects. I think they wrote it in the MD&A, and I think it's okay for management to say, like, yes, we are considering our options and we may not continue with the diamonds. So if you then know that they have strong shareholders, not just Eric Sprott, but you can also look into their financings, how many people participated, what was the average check. If that's $80,000 or $100,000 on average, then you know it's not just the retail guy in there. And sometimes they can even tell you a little bit about who the shareholders are, or maybe in public domain. If you can realize, like, hey, there are bigger people than me sitting here with a higher cost average, they have a reason for this thing to still work out. The management team is credible and good, and they are looking for a new project. Well, what's the risk really? I mean, there's always risk, but then at a 3 million valuation with 40 million shares out, well, that if you call it a look special, that would be a look special. I always look at companies below 50 million shares out that for some reason, and sometimes also a little bit more, but that for some reason are in a bad spot, but don't have warrants, or at least no warrants very close to the current price, but still have something on the go, even if it's just a management team. And then, you don't need a discovery for the thing to go 3 or 4x. So I like those type of plays, and Storm is that play. Maybe I'm not playing it right now that way because I still own stock from way higher levels. Probably my average is, if I look at the chart, and I bought around 2020. Well, that's eight. Well, no, my average probably is 7-8 cents, but that's the previous 7-8 cents times 4. So you can imagine how I feel. But that's typically what I do, indeed, looking for those type of things. And at some point, if you call a company every month to ask, how things are going, and they cannot always tell you that much, you get a bit of a relation with the company. And over the years, because sometimes, I talked to Bruce now for probably 3 years. And he wouldn't say. I didn't know anything about this deal, to be honest. I didn't see it coming. But you get a bit of a relation, and you get a little bit more context, and that I think that's something every investor should do if you try to look for these type of deals.
Yeah, I agree, and it's also what you're saying here. Like, you managed to hold this from, you would need basically a 4x. Well, no, not anymore, but from the price before, you would need a 4x to be break even. And that's interesting, because the fact that you were able to hold it says a whole lot about your position sizing, and you got that part right. Because if you were overweight on it, you probably wouldn't have been able to hold it for that long, because you might have needed the money or something like that. So I know this is sort of a boring lesson that I keep getting, that I keep reminding myself of, but position sizing is everything when you're playing these risky sort of, almost lottery tickets here.
True, but in this case, I was actually quite heavily positioned, and my average was really low, in my opinion. It was around 5-6 cents in 2020. So I probably know Bruce already for 3.5 years or 4 years, and I sold some at 16 cents, and 16 was the absolute high. And what was another interesting angle is that Crescat came in, which gave a little bit of a promotional push, but they did some really weird buying. They don't have to file all their buying, but they do it through a monthly alternative report, or alternative monthly report, I think they call it. And that's how they do it on a monthly basis, how they report their ownership. And it became obvious to me that they were trading under the Canaccord broker house, and a lot of these Crescat stocks went up end of the month, or you started to seeing patterns in it. And I think the 16 cents was touched because Crescat was heavily buying, and I sold that liquidity to sell a little bit. I used that liquidity to sell a little bit, and so my cost average, you could say, came down because I bought at 5-6 cents and I sold at 16 cents. Not as much as I should have done in hindsight. So my cost average came down, and at some point I had a position. I also sold probably a little bit more at 12 cents. I don't exactly remember because I didn't sell for a very long time, but I did sell some a couple of years ago. So it became a position size. Luckily, that didn't hurt me too much because I was actually quite invested in this company, and I still am, but not. Well, after the rollbacks and after the financings, my percentage went down from maybe 2 or 3% of the company to maybe 0.5% of the company. I don't even know how much exactly because I'm not following it in on a daily basis anymore. But yeah, but your point is still correct. Position sizing and knowing where you are and how much risk you are exposed to. At 16 cents, the company was a $20 million company, and at $20 million, you have to show something. You don't have to show the biggest discovery to maintain your market cap, but you need to show some promising signs for investors to give you that 20 million market cap, or maybe even go a bit higher. And I did realize that the company didn't, at that point the company wasn't worth 40 million in my opinion. So that's why I sold a bit. And I always ask myself the question, like, what is a company worth? Like Lavras right now is trading at 70 million, a very different company, very different topic. And I still think, based on what we know today, it's undervalued. So then you feel like, well, maybe I shouldn't sell yet. But that's of course also depending on drill results.
Well, the market was also quite different in 2020. I think that's also worth mentioning.
Yeah, true.
And another note that I guess we make this every week, but still important, is like the fact that Crescat is in or buying that aggressively is not just a go all in type of signal. I mean, it is something, but they've also been in, obviously everybody makes mistakes, and so they've also been in bad deals, and there's also a bunch of other things that happened around that time with them too. So but anyways, I'm actually happy that you're mentioning Lavras, because we can maybe touch upon that as well. They're not in the top movers this week, or not in your list, and I don't know how much you care about chart patterns. I don't at all. But I'm only bringing this up to draw a sort of a mental picture for people who are listening or being forced to listen. But so Lavras Gold has broken what man astrologists would call a bull flag to the upside, if you look at the chart, and it's happened on news of a financing, and this also closes into the whole topic of following or not following people into financings and stuff like that. As in, there's it's heavily weighted, as in there's heavy hitters that are participating in this financing. So you have Sprott, McEwen, Kinross, and so on and so forth. Big names basically going into this. But we don't necessarily have an idea of what this thing is yet, right? Because you said that you have to have something to show for it. I also spoke to Lobo Tigre this week about what is a discovery? Like, is one hole a discovery, or visuals or a discovery? Because we can also bring in Aston Bay into the conversation, if you will. They fell quite a lot this week, but they went up quite a whole lot more because everybody thought they had a discovery. Yeah. So yeah, the stock, the Lavras stock has now gone up, what, 5-6 times, maybe 7 times since before the core thing pictures, whatever. You can call it a discovery, I guess. So I get the euphoria in the first place, but again, this thing is worth $70 million in market cap. So I don't know. I don't have a question, but I have a
but in the Lavras case, they made a couple of discoveries last year nobody paid attention to. And a couple of interesting ones. 10 meters of 13 grams. I mean, 10 meters at 13 grams in a greenfield scenario. And I didn't pay attention. Nobody paid attention. I think the stock went up a little bit, but not much, and just came back down again. And I think they made a couple of discoveries within their project, the LDS project. And the reason this one got so much attention is that they sort of out of the blue, pretty close to their existing deposit, but still out of the blue, well, they drilled a hole that they explain as intuition, and there was not really a direct sign like drill here by an anomaly or a geophysics. They just felt like we should test this side of the deposit as well, even though there's not much of a signal that it goes that direction. And they drilled 340 meters of 1.10 grams, and within that 160 meters of 1.8 grams. I mean, this is a snowline type hole, but a bit deeper, so that's a direct concern. But if you listen to the presentation, they talk about exploring this vast land position in Brazil, because they believe the signs and whatever they see has the potential of hosting a very big deposit, like world-class big deposit. And of course, those words are easy to use, more difficult to actually make real. But if you talk about that for many times, and then suddenly you drill a hole like this, it shows that they are thinking in the right direction. I mean, this is a big hole, and they should be able to follow it up. If they didn't drill into a pipe or into a known thing, but they actually measured some kind of width, then it's very difficult to think that there's a 300-meter zone of gold and suddenly there's no gold anymore. So the next holes should be interesting. If they are disappointing, the stock indeed could come down, but it is telling that not only Eric Sprott, who was already a shareholder, who keeps his position or maintains his position, also Rob McEwen comes in. And the way Lavras reacted is a little bit similar. I posted this week on the Gold Discovery Twitter. The month, almost to the date in August, Great Bear made a discovery in 2018, and they also had a clean share structure. And you can see the discovery. They both made a discovery with uncertainty in the future. They both had a good share structure. They both had almost the same share price, 40 cents. And the stock almost did the same thing in terms of pattern. So the supply, demand, and everything was a bit similar, and that's why the chart is so similar, in my opinion. Going forward, it all depends, of course, on results, but also it has a little bit of a dip around the financing. Now they confirmed that there are three big names in Kinross, McEwen, and Sprott, and the stock starts going up again. And I don't know for sure, but I think the stock could not even have gone over 170, because I think there's a rule that the stock should stay within 25% of the financing price. I'm not completely sure about that, and if that depends on market cap or price, but somebody told me about it, that hey, the stock can probably not go higher than 168, because then the price protection would fall away, and then the exchange may have a problem with this financing. So you saw 168 almost as sort of cap. The stock went back to 135, and now it naturally went up again when they closed the financing, also announcing a couple of big names. So far it is the ideal scenario for a discovery company, but of course now the drill holes should work out. I mean, now the essays have to speak and tell the story going forward again. But I'm not surprised that the stock is so strong, and I think with the potential in mind of such a big system, $70 million is not a very crazy market cap. With two or three holes confirming this system, I could easily see a double from here. But again, I'm a shareholder. I'm not a geologist. I'm biased, and every other disclaimer. I'm not predicting a double, but that's the way I look at it.
Sure. You make a good point, though. If at 70 million market cap, this has to work out. The stakes are much higher than, sub 10 million. If this was sub 10 million, the downside would not have been as large as it is right now. So the risk reward is not the same as the time that you bought it at. That's just kind of how it is.
I bought it at the news date, at the opening, and it was still a $20 million stock. Now it's a much bigger stock, but it's still. Keep in mind that Snowline was a $40 million company before they made the discovery hole. And if you say that, hey, they had a promising project, but no discovery yet, not a major discovery, and if you consider that this was a big project without a major discovery, they are just getting close to the market cap of Snowline pre-discovery or around that market cap. So 70 million is, of course, something, you could easily lose again if there's some bad holes, but I didn't sell a share yet, because I think 70 million could also prove to be very cheap if 3 or 4 more holes confirm this system. But again, that's up to the investor. How much risk do we want to take? I'm happy with my low cost average, so that makes it easier for sure. But if Rob McEwen is willing to pay 135, he's not stupid, and I think his advisors are not stupid, and he has done good investments before, in Great Bear, for example. So
he's also done bad investments, though, like everybody. So,
well, his
more
investments,
good than bad, I assume. Though
his investments have been quite okay. I think his companies have been doing. I mean, McEwen Mining didn't do so well last couple of years, but the investments so far, the ones that I have in front of me, Canadian Gold Corp and Great Bear, that's the two, and I have one in Ontario recently as well. They did well for him so far. So as an investor, I still see him. Well, also as a CEO, but as an investor, I also see him as one of the best ones in the industry, at least from that caliber. The McEwens, the Lasanders, the Sprotts, those kinds.
He's also got a nice suit on one of those pictures that you shared this week. So it's a nice development. but Aston Bay was a $70 million company too. A couple of
was it 70 or was it 60 maybe or 50? I don't know, but it was a high number. Yeah.
I think it was, so let's see, 6.5 cents now. It got up to what, 35?
32, I think, but yeah, around that level.
Let's see.
And they own 30%. Well, they own 20%, I think, carried interest.
Right. Yeah, they get up to 34 cents actually. The 190 million share structure is quite different. So it's $65 million. Quite a different share structure. I don't know if you know, if you think that made a difference or not, but I assume it did. But again, was 65, it's 12 now.
Yeah, but in another podcast, we talked about it a couple of times in this podcast, but I mentioned it 27 cents when everything was just happening and everybody was excited. And I got the question like, my story was I was in the placement at 3.7 cents. That placement was cancelled, which left me without a position, which didn't make me feel good because I was quite happy to be in that cheap financing. They canceled it and came with a 16 or 18 cent financing. In between, somebody asked me, wouldn't you just buy the 25 cents? Look at this could be a big system. And yes, it all looked very good at the time. But I said it's also important indeed to have, to have a cheap entry, because at this point, at 70 or 60 or 50 million for 20% of the company, it really needs to work out. Otherwise, you cannot maintain those valuations. You can only maintain it or go higher if it really is that big discovery everybody was hoping. And this week, they announced disappointing results at depth, maybe promising results at surface. But I mean, the big share price move was because of the deeper intercepts, because of the sedimentary type deposits that people were looking for, and it was really disappointing. And then you see that the stock goes down. The share price, the placement went from 3.7 cents to 18 cents. Now the stock is trading at 8 cents, so that financing got again repriced to 8 cents. Then the price went to 6 cents, I think, for a moment. So it's a rough story right now, and what to say? You can see that a lot depends on drill holes in the end. These drill holes were disappointing. I don't think the Aston Bay American West story is over. But for the next coming months, where they cannot drill until the spring next year, I don't think it will be a big hype anymore. I don't think it will be very strong, the share price, knowing where they are right now. But maybe an external investor could change that. There's always some other event that could still make the company popular again. But right now they are in a tough spot.
Sure are. What else is happening this week? I think we went through the most important stories, but something else that I'm missing?
Yeah, so I created a list of movers again. We don't have to go through all of them. We just discussed Storm. Argentina Lithium came with an investment from Stellantis. They are the company with all these car brands below them, including Peugeot and Chrysler, and but a lot of other brands. And they do a 90 million investment into Argentina Lithium, a company I don't really know, but considering the market cap before this news, 30 million, getting a 90 million investment for I think only 25%. I was thinking of buying the company in the market because I thought, well, this could go up. Well, it happened. I didn't buy it, so some other lucky people got in and made a double this week.
What do they have? They don't really have. This is over $60 million exploration company. I don't necessarily know that they have anything to show for it.
When you see a trading halt and you see that this company invests, or the investment is not done deal yet, but wants to invest 90 million US for 25%, it's very easy. The stock will go up from its 30 million market cap. So I don't have to know anything else than that. I was bidding when the halt was almost coming off, but the bids were increasing and increasing. And at some point I thought, well, at a 45 or 50 million market cap, I am not sure how much upside there really is. And I don't want to take too much risk with a company I don't know. So I decided to cancel my bid. And I could have made some money from the opening, but I wasn't willing to pay that price. Initially the bids were much lower, and I thought, well, if I can buy it at a 40 million market cap, I can probably make money on this, at least for a trade. That didn't work for me this week. But that's the type of company. This news, you could trade it a little bit, or you could just buy it and then sell your principal and keep the rest or whatever. There's various strategies, but when you have news like this, even if it's cancelled later, you can still trade something like this because it's pretty impressive.
I just saw Alfa Romeo, Citroen, and Peugeot and thought I'd just ignore this.
Yeah. Also not my type of my cup of coffee, but I don't think those shareholders care about that.
No, true. Lithium triangle possibly attracts a whole lot of people too, and for good reason. It's worked out for many companies out there. So, Brazil also seems to be getting hot
Yeah.
with what is it, deep rock minerals, something along those lines. Yeah.
Yeah, I don't really follow it in detail, but I've mentioned it a couple of times. Every time a company acquires a lithium project in Brazil, every time after Solis Minerals, these stocks always go up. And it's typically small companies between 2 million market cap and 5 million market cap who suddenly find a nice project in Brazil in that belt where I think all the lithium deposits are found or being found. So I have nothing other else to say than here is another one. Deep Rock also found a lithium project, and maybe I'm not trying to say bad things about it. Maybe they really found a good project. It's just a trend that I notice every week. Putting the list together, that almost every week there's a company buying a lithium project there in Brazil, and the stock doubles.
Hmm. Yeah, it seems like a limited time glitch, sort of like in like when you're playing a video game or whatever, you're using some type of cheat code that works for a while and then
Yeah,
stops working. So it'd be interesting to see what
yeah,
goes there.
yeah. I mean, there's probably good endowment there, and I mean, I don't think these companies just go there for the cheat code. They probably think there's something real. But indeed, the cheat code may just work for a little bit of time, and then people do not buy into that headline anymore, and then it's just about the real results. And
Hmm.
hopefully, some of those companies will make an actual discovery there.
Yeah.
I think there are discoveries, but the new ones coming in, maybe they find something. I don't know. I don't follow lithium that much, and but yeah, it's interesting to mention because a lot of people still follow lithium, follow Brazil, and apparently these stocks still. I mean, this was a $2 million company that went to become a $4 million company on okay volume, not amazing volume, but for a company like this, $154,000 is not bad.
Yeah. No, it's true. Again, interesting to see where all of this Brazil thing goes to, because it's not only lithium though. There's some Brazil is getting interesting. I spoke to someone 2 or 3 weeks ago who's very interested. Matt Geiger from MJG Capital is very interested in Brazil. I think like a third of his portfolio, of his friend's portfolio, is in Brazil. So Brazil's getting interesting.
Yeah, yeah, yeah. This is the Brazil episode. We also mentioned Lavras.
Hmm.
Are there any other Brazil things in the list? No, we have Ecuador. Lucky Minerals.
Not so lucky, yeah. Ecuador is kind of interesting right now.
Yeah, I looked at Lucky a couple of years ago. They had some interesting trench samples, and I got the impression that they were onto something, but it was very early stage, no drilling yet. But I listened to the CEO a couple of times. He was explaining to investors that warrants are a very good thing because it secures funding in the future. I look a little bit different at those things, but then Gentili bought the stock. I was a bit surprised. I was actually interested for a moment to participate, but it was a done deal because Gentile brings his own network and is not allowing other people in typically. But this deal didn't really work for Gentili, and I think he's bailing at half a cent after investing probably at 6 cents or something. And Lucky Minerals is a company that is not a look special as you call it because they issue a lot of warrants, full warrants, just above the current price. And I don't want to say that's just the reason for the stock being at half a cent, but or a cent. But it certainly plays a role, and that's I sort of hate companies that have so many warrants. But it's very easy to say, of course, from here behind the screen. Other CEOs need to find the people investing, and in most cases, investors demand a warrant to participate. So it's of course easy to say, but the ones that can do it, I made a list this week of companies without warrants. Maybe I will share some of them next week. You can see that it's often the good companies that for some reason can find capital without warrants. It's already saying something. It's already a first good sign, I think. Not just that there's no warrant, but also that the management pulls it off. And I was impressed with the companies that showed up in the list that I created.